Hi everyone, my name is Amanda Douglas with Celebration Title Group. I'm here with Paul Massey of Cross Country Mortgage. So the goal of our video today is just to kind of give you a brief overview of the mortgage process, really kind of bring it to you from two professionals in the industry. We deal with this every day with buyers and sellers. So we kind of call ourselves the dark side, right?
The dark side,
yeah. We're the people holding the money, giving the money, and we just want to make sure everyone understands our key roles in the process. So really the goals of the interview are just to answer any general questions, whether it be from a buyer, from a seller, or from a real estate agent, on how we can better equip you guys with all the questions that you need, the process, the steps, and where we need to go during that. So I'll give the floor to Paul. Paul, kind of introduce yourself.
Okay.
And
all right, my name's Paul Massey. I work for Cross Country Mortgage. We started our branch in September of last year, and I've been doing this for 15 years. I was actually kind of dating myself now, but I was selling long distance in high school, or excuse me, in college. And then a mortgage company tapped me on the shoulder, and I've been in love with it ever since.
Very good.
Yeah.
Okay. I know we all have so many different ideas of the mortgage process as a whole. There are a ton of different lenders out there.
Right.
We hear so many different key phrases and acronyms, so we really want to go through those and kind of just give a brief overview of it. So the biggest question I always get is, what is the difference between a broker and a direct lender?
So a broker is essentially, it's kind of like an insurance broker, so to speak.
Okay.
So they have a lot of different outlets they can go to, and they will choose which one has the most competitive pricing for their client, and which one is going to have the guidelines that are going to allow them to get that deal done. With the direct lender, we have our own correspondent lending lines set up, so we don't really have to. The one negative I think about working with a broker is if you are brokering a deal to Chase per se, and they have to underwrite that file, that underwriter doesn't work for that broker, right?
Okay.
So they're not really connected to them. They don't have to talk to them every day. They don't have to see them in the cafeteria, whatever.
Sure.
So when you're a direct lender, everybody's part of the same family. So with that, you can essentially really have somebody that you can build a relationship with, so your deals are eventually going to get done faster and more efficiently, because they're going to know what you're thinking, you're going to know what they're thinking, because you work together so much.
So it's just more efficient.
Yeah, 100%.
So I'm guessing that Cross Country is a direct lender.
Yeah, I kind of set that up, right? Yeah, we are a direct lender.
Okay.
We do have some brokered products.
Okay.
Because we can't be all things to all people on the lending side.
Yeah.
So there's some niche products for people to do with bank statements, foreign national, stuff like that, that we can broker out. Yeah.
Okay, very good. So just kind of walking through the process, we hear this word pre-qualified. What is a pre-qualification? When should a buyer really do that?
Well, it's number one is you shouldn't go and look for properties with an agent without any qualification at all whatsoever.
Definitely.
So that's, as a mortgage company or a broker or anybody in the lending business, that's the biggest kind of nails on the chalkboard moment for us.
Okay.
Is when we get that call at 8 o'clock on a Wednesday night, and they're trying to write an offer and they haven't even talked to a lender yet.
Sure.
Okay.
Yeah.
So with that being said, you've got your pre-qualification, pre-approval. There's no pre-qualification or pre-approval police out there, so there's no set definition that every mortgage company must abide by.
Sure.
So people think when they hear pre-approval that it's a better version of a pre-qualification.
Okay.
Not necessarily. It's usually a wolf in sheep's clothing.
Okay.
So with us, we do loan commitment up front. So we have a full underwriting approval. So we try to give you something that nobody else really can.
Okay.
Yeah.
And so with a loan commitment instead of a pre-qualification, that obviously weighs itself a lot stronger if they're making an offer on a property?
Absolutely. So cash is obviously king, right?
Right.
But if you don't have the cash, knowing that you're guaranteed financing, having a loan commitment from an actual underwriter, you can't have anything as close to cash other than that. So it's a huge tool.
So as a buyer and as a real estate agent, if there's multiple offers on a property, to have a lender that's given me a full loan commitment,
absolutely,
is huge.
Yeah, it means a couple different things. It means you can close fast, because essentially you've done everything except underwrite the collateral. So the only thing you really need is appraisal and title, and you can get to the finish line. That happens.
Sorry guys, work never stops.
No, so we'll appraisal, title, you can close. So right now I think we're averaging getting loans ready for closing in about a week and a half, which your big banks that are too slow to kind of do things that way, they're typically 11th hour, day 28, that's when they're getting things done. So it's good to have it up front.
Understood.
Yeah.
So one of the terms that we always hear from buyers is locking in a rate, rates expire, all these kind of things. Kind of give us a general idea of what that is and what that means.
So, sure. So the biggest thing that people make the mistake of, I think, is they start thinking about shopping for rates. They put the cart way before the horse. Okay. So a lot of times I get people that ask me about rates. They're not even pre-qualified yet. And they're really setting themselves up to where if they talk to somebody that knows that they're not going to be tied to whatever rate, then they might misquote that buyer purposely. Okay. So that way they're the only game in town, right? Yeah. So the first thing that I try to explain to people is like, slow down. First thing you want to do is make sure you're talking to a professional, talking to somebody that's well respected in the market and somebody that you like, right? Because you don't want to be going through that process with somebody that you're not clicking with. So, and then when you're under contract, that's the earliest that anybody can ever lock you in, period. So once that happens, you have one or two people that you actually have a good relationship with that you can stand, and then see where they're at. And they should be pretty close to the same, but and when you lock in a rate, essentially you're freezing time on that date. You could still change the term. You could still change the option that you want as long as you do it about a week before closing so we can get our disclosures out correctly.
Perfect. And as far as like loan programs and down payments, there's so many different things out there. We've really gone away from that standard typical. A lot of buyers are scared to even get pre-qualified because they think we need 20% down. There's no way, you know, these 20% down programs, they do exist, but there's so many more options for buyers. So kind of tell us about the different programs and down payment and how you really help the buyer, you know, kind of fit.
Yeah, so the biggest thing we tell people is not to go into it assuming anything because there are so many programs. A lot of people say, oh, I want to do FHA financing, which is fine. But the typical question that I say is, okay, you've never bought a house yet. How do you know you want to do FHA financing? And typically the answer that we get is, well, I don't have 20% to put down. So then, you know, what ends up happening is because they are a first-time buyer, essentially, with most of those situations, what they don't know is actually as a first-time buyer, you can do 97% financing and put 0.5% less down than you thought you were going to have to with FHA. Right. So we just try to immediately kind of like understand what they think they know and then kind of break that down and go from there. Right. So
yeah, perfect. Yeah. Okay, so if I'm a buyer, got pre-qualified or got committed from Cross Country Mortgage, so I'm out shopping for a home, get my offer accepted, what is the first thing I need to do to help to make your life easier?
The first thing that you need to do is really, hopefully by the time you've got to that point, we've jumped through 98% of the hoops. We've done the underwriting. You have your upfront loan commitment. So the biggest thing you really need to do is just be responsive. And you should be at that point because if we've gotten that stuff done, we've already kind of developed how quickly that we need things when they're there. You got to understand in the mortgage business, you are guilty until proven innocent. So you are going to be asked for just about everything except your blood type. So if you go into it not stressed out about that, then you'll be okay. And it's not that underwriters are bad people or they're a bunch of jerks or anything like that. It's just, you know, they've got a job to do, right? And they've got to make sure that they, you know, get everything documented the way they're supposed to. Yeah.
Okay. So this is kind of, you know, from title perspective, really when title gets involved. So as a buyer, real estate agent, or a seller, this is where you're really going to start hearing from a strange person wanting to know all of your information about your current mortgage, who you're closing with, or you're going to be at closing, and that's where escrow really gets involved. An escrow agent really, in essence, is a neutral third party. We just bring in money from everyone and we disperse the transaction according to the terms and conditions of the contract. So this is when we really start working with the lender, and they've already done a lot of the work, so I know you guys have a lot more work to do than we do. But we work hand in hand and we really are kind of, we're at their mercy as far as closing the transaction. So they do still prepare all the loan documents. We just handle actually getting everyone together and getting all the money out. So that's kind of that gray area that a lot of people don't understand. Just understand when you do go under contract, you will start hearing from what we call an escrow or title company. So as far as those next steps, and then you said going into underwriting, we all hear this crazy word underwriting, and we all think that there's some cold room like the IRS, these underwriters. You know, what is underwriting? What is that in essence?
Well, they always put them in the basement. So
I thought so, yeah.
No, I mean, so underwriting is essentially, the difference between a salesperson and an underwriter, essentially a salesperson their goal is to get the sale, right? So they're very motivated by that, where an underwriter is layering risk.
Okay.
So they're thinking about the company, they're thinking about the risk factor that's involved. So essentially you have two different parties that are looking at two different things.
Right.
So that's why there's this common misconception that, underwriters are the worst and wait until we get to underwriting. And the other reason is almost every single company, I mean, there's some great ones here, but they do everything backwards, where they do underwriting at the very, very end. So if you're on a 30-day contract and, you've got a mover set up, you're going to be homeless in a week if you don't move into a place, and you don't find out until 6 days before you're closing that there may be a hurdle that maybe you can't get over.
Right.
That's what makes it so stressful, right? But when you work with somebody that does it up front, it's just not the same stress level.
Yeah.
So, yeah. And
it puts a lot less stress on the title company, too, because that's where they're storing their moving truck is outside waiting to sign the documents, right?
Yeah.
So, ultimately, it sounds like with underwriting, as a direct lender, do you all kind of control underwriting? Do they work in-house, or how does that work?
I mean, as far as where they work, I mean, they do work all over the place. Like, we have a corporate office that has a lot of underwriters.
Okay.
We have branches that have in-house, but that doesn't really matter so much.
Okay.
But they do all work for us.
Okay.
So that's a good thing, because, we're all kind of on the same team. So our company culture and the way that we run things is one that we're all constantly working together to make it right.
Sure. Okay. So ultimately the goal of the transaction is to get it to those three magic words we call clear to close, right? So tell us what clear to close is and what a buyer should expect when they actually get those magic words.
Those three magical words. Yeah. So clear to close means essentially that you're done. You've gone through the dreaded underwriting process and you are approved to buy a house.
Okay.
So yeah, that's really what it boils down to. And like I said, you want to work with a company that tries to get that done a week or two before closing every time.
Sure.
So
yeah. And then once we do get that clear to close, ultimately the title company would work with the lender and everyone else in balancing that final closing statement, get you your cash to close, and make sure you're here and doing all of your closing, notarization, everything in person. So that's kind of where we, in turn kind of work together, and we really wanted to, get you to that final closing moment. So at title transfer is the final closing moment, is where we meet together, sign the documents, get everything notarized, and you get your keys. So that's kind of the closing process in a nutshell, the steps that it takes. Anything else you want to add? Or
no, I just think it's important, if you're out there, and to talk to different agents about what lenders they've got those kind of good relationships with. They're getting things done early, and talk to different lenders about which title companies are doing that too, because there are some title companies that are kind of like, we call them title mills, right, where they do massive amounts of business for Fannie Mae or a big lender, and it's literally a black hole. So you want to make sure that you're aligning yourself with professionals that way, because it can make all the difference in the world.
Yeah, because overall, I mean, this process we've talked about for over 10 minutes, it can feel very intimidating, right?
Absolutely.
So if you've got the right professionals around you that can help keep it calm, we're going to get it done, we're going to get it closed, we work very close together, then ultimately you get in your home a lot quicker with a lot less stress. So thank you so much for joining us, and we look forward to closing a home with you soon.
Awesome. Thank you.
Thank you.